Buying a house and getting a loan can be super stressful, but it really doesn't have to be. You see, most people stress about what their interest rate's gonna be when that may not be the biggest factor in determining whether or not the house is gonna be right for them. Every situation is different when buying a house, so it may be better in some instances to focus on interest rate. In other situations, it may not be the right thing to look at interest rate. Here at North Shore Mortgage Partners, we look at the whole picture when we're getting you pre-approved. Hi, my name is Nihart, and welcome to Laya. And today we're going to talk about the 3 things you need to know before getting a mortgage. I'm sure you might be thinking, how much do I need to put down? What's my monthly payment going to be? And of course, what's my interest rate going to be? And yeah, you can definitely turn to Google for all your answers, but the last time I did a Google search, I had arm pain and it told me I was gonna have a heart attack and die. But here I am, and unless you're a numbers person, all that stuff's gonna be very boring to you, and I wanted to save you a little time just by watching this simple video. So the first thing we're gonna talk about today is interest rate. Everybody wants to know, what's my rate? If I had a nickel for every time somebody asked me that question, let's just say I'd have a shit ton of nickels. The first thing you need to know, what is gonna be your intentions with the property? Are you gonna keep this house for 2 or 3 years and then sell it? You're gonna keep it for 2 or 3 years and then rent it out? Or is this gonna be your forever home? You need to know all these things before you get focused on interest rate. Let's move on to number 2. The myth that you need to have perfect credit to buy a house. There are all kinds of programs out there that are gonna be better for people that have lower credit. Things like the FHA loan, where you only need a 580 credit score and you can put 3.5% down and get a house. Or you can do a USDA loan, which requires a 620 credit score and you don't need any money to buy a house. Then there's the VA loan, where you have to have at least 580 credit and you don't have to put anything down. Look, I'm gonna state the obvious. If you have less than perfect credit, your interest rate will be higher. But like I said, interest rate is not the end all be all. It's almost always a sound financial investment to buy a home. And myth number 3 is, of course, you'd have to have 20% down to buy a house, right? I know your parents, grandparents, uncles, aunts, aunties, cousins said that you had to have 20% down to get a house. Well, they are dead wrong. I get people into homes all the time. Sometimes with 0% down, 3%, 3.5%. These are all options for people, and you don't need to have that 20% to put down. But then, what am I gonna do if I don't put 20% down? I'll still have PMI. Now, do you really wanna tie up a large chunk of your money when it just may not be financially worth it? You may just want to hold on to that money and invest it in the market. If you can get a higher return versus what you're paying in interest on a mortgage, it makes more sense to hold on to that money. Yes, it comes down to whether or not you're going to be comfortable with that monthly payment, but hey, that's where I come in. I can crunch those numbers for you, tell you whether or not it's going to be worth it for you to invest that money into your home, or keep it and invest that into market, or maybe save that for a rainy day. You don't want to blow all your money just because you're trying to avoid PMI. Also, fun fact, if you put 20% down, that is absolutely the highest interest rate you will get in terms of what money you're putting down on a conventional loan. And you may be asking yourself, why is that? Well, it's because your loan's not insured anymore. So the lender is taking on all the risk now. Oh, you thought we were done? Now I'm gonna give you bonus myth number 4. So you may be telling yourself, man, I can't afford to buy a home. Well, I'm here to tell you, maybe you can. The first question that a lot of people ask me is always, what's my interest rate? And the second most asked question that I get is, how much am I pre-approved for? That is not the question you should be asking yourself. You should be asking yourself, how much can I get pre-approved for and still fit in my monthly budget? So you may go to some online company and they may pre-approve you for $500,000, but do you want a $500,000 a month house note? Probably not. Your credit score and your debt to income ratio are probably the 2 biggest factors in terms of how much you can get pre-approved for. However, years in the same line of work, credit history, savings accounts, money you have saved up can also all affect the amount that you can get pre-approved for. So like I said, the question is not how much can I get pre-approved for, it's how much can I get pre-approved for and still have a house note that fits in your budget. It's never too early to begin getting your finances in line. Just remember, your situation is not like your neighbors or your cousins or your aunts or your uncles. That's why it's important to work with someone who's gonna assess your situation individually and make a plan that's gonna be right for you and your family. I hope you guys enjoyed this episode of Laya. Make sure to follow me on all the social media sites at Bayou Mortgage Guy, and make sure you hit that subscribe button. I'm Ben Nihart, the Bayou Mortgage Guy, and we'll catch you on the next episode.